Homebuyers, opportunity is knocking based on the latest market data. Now, mortgage rates do not need to drop significantly for a surge in buyer activity to take place. The housing market today is like a tightly wound spring, coiled with potential energy, waiting for the right moment to release. Just as a spring holds tension before it expands, the market is in a temporary state of quiet before a significant shift. The current housing market is in such a phase, calmer than in previous years, yet poised for a shift once mortgage rates drop. Hi, it's Christopher and Brixmar with MMG Real Estate Advisors, your local Orange County realtors, with another market update for the month of March 2025. Now, let's break it down. After years of an ultra-competitive housing environment, the market in Orange County is far more balanced. Housing inventory has expanded as more properties enter the market, with supply accumulating since early last year. However, buyer demand has remained low due to rising mortgage rates since 2022, making homeownership less affordable. The combination of increased supply and subdued demand has led to longer market times and fewer bidding wars. For prospective buyers, this spring is the most favorable market since 2019. The shift does not indicate a decline in home values. According to Freddie Mac Home Price Index, home prices in the Los Angeles, Orange County metro area have increased by 5% year over year as of January and are up 0.5% month over month. The role of supply and demand. Understanding how the market can change requires analyzing supply and demand trends. The narrative of growing inventory across the U.S. has gained attention, yet the housing market still faces long-term supply shortages. According to the National Association of Realtors, inventory has averaged 1,137,000 since 2021. In January, it reached 1,180,000, making it a 17% increase from last year. However, this is still well below pre-pandemic levels when inventory averaged 1,980,833 from 2012 to 2019. During the Great Recession, inventory averaged 3,347,500, nearly 3 times today's levels. When mortgage rates spiked in 2022, home affordability plummeted, reducing demand to Great Recession levels. Yet home values remain stable due to a limited housing supply. In Orange County, active inventory currently stands at 3,419 homes, a 64% increase from last year's 2,084 listings. However, this is still 55% lower than the pre-pandemic 3-year average of 5,286 homes. The inventory has grown primarily due to an accumulation of listings rather than an influx of sellers, as many homeowners are reluctant to sell and give up their low fixed-rate mortgages. In 2023, 41% fewer homes entered the market compared to the 3-year pre-pandemic average. In 2024, the shortfall decreased to 31%, and in early 2025, it was only 20% below the historical average. Buyer demand in Orange County has remained subdued since mid-2022. Currently, pending sales stand at 1,665, an 8% increase from last year's 1,538. However, it is still 51% lower than the pre-pandemic 3-year average of 2,517 pending sales. Market velocity is measured through expected market time, the number of days it takes to sell all active listings at the current buying pace. Presently, it is 62 days, slower than last year's 41 days, but in line with 2019, when the market felt more in balance. The anticipated surge in buyer demand. A significant wave of buyer activity will emerge when mortgage rates drop towards 6%. As the economy slows, factors such as rising unemployment, fewer job openings, and weaker retail sales will drive mortgage rates lower. Recent economic indicators suggest this slowdown is already beginning. Since February 19th, mortgage rates have declined from 7.13% to 6.8%. If this trend continues, rates could return to 6%, a level last seen in September of 2024. Lower rates dramatically improve purchasing power. For example, A buyer targeting a $5,000 a month mortgage payment with 20% down could afford a $940,000 home at a 7% interest rate. If rates drop to 6%, that same payment allows for a $1,042,500 home. As affordability improves, more home buyers who have been waiting on the sidelines will enter the market. A preview of this potential surge occurred in late 2024 when rates dipped below 6.5%. For 47 days from August 20th to October 3rd. Demand jumped 10% in September and remained elevated through the year's end. Millennials and Generation Z buyers are eager for better affordability. Will flood the market once rates stabilize at 6% or lower. This will reignite bidding wars, driving multiple offers and pushing home values higher. The luxury market. The high-end market has slowed slightly with inventory for homes priced above $2.5 million, increasing from 939 to 978 homes, 4%. Meanwhile, demand for luxury homes declined by 2%, with 196 pending sales. As a result, the expected market time for luxury properties rose from 141 to 150 days. For homes priced between $2.5 and $4 million, the expected market time increased from 113 to 121 days. Homes in the $4 to $6 million range saw an improvement, with market times dropping from 159 to 140 days. However, properties above $6 million are taking significantly longer to sell, with market times rising from 197 to 261 days, meaning a seller listing their home today may not sell to a buyer until late 2025. Today's housing market offers a rare opportunity for buyers. While inventory remains higher than last year, it is still far below pre-pandemic levels. Mortgage rates, though elevated, are expected to decline, spurring a wave of buyer activity. As the economy cools and rates drop closer to 6%, demand will surge, competition will intensify, and home values will rise. The current market is in a brief window of opportunity before conditions shift dramatically. If you found this market update helpful, please like the video and subscribe for future updates. And if you know someone who is thinking about buying or selling in Orange County, share this video with them. Thanks so much for watching, and we'll see you on the next one.